Imagine you are starting your trading day. The US stock market has just opened, and you are scanning the charts for high probability opportunities. You see a stock moving steadily upward, but you are not sure if it is a good time to enter or if you are chasing a peak. This is where VWAP comes in. VWAP stands for Volume Weighted Average Price, and it is perhaps the most important intraday indicator used by both retail traders and massive institutions. In this masterclass, we are going to dive deep into how VWAP works, why it is the fair value benchmark for the day, and most importantly, how you can use it to build a structured, professional trading plan. By the end of this video, you will understand how to stop guessing and start trading with the flow of the market. To understand VWAP, think of it as the true center of gravity for a stock during the trading session. While a normal average just looks at price points, VWAP takes every single transaction into account. It tells you exactly where the majority of trading has occurred, giving you an objective look at the fair value for that stock throughout the day. For beginners, this is a game changer because price alone can be incredibly misleading. A stock can spike quickly on low volume, but if it remains below the VWAP, it tells you that the overall market sentiment hasn't truly shifted yet. It is essentially the dollar cost average of all buyers and sellers since the opening bell. Understanding this anchor allows you to see the market not just as moving lines, but as a battlefield of volume and conviction. The math behind VWAP is simple but powerful. For every time interval, we take the average price of that candle, multiply it by the volume traded in that period, and add it to the running total. We then divide that cumulative sum by the total volume transacted since the start of the day. Because it is cumulative, the VWAP line becomes more stable as the trading session progresses. In the first few minutes of the market, the line might jump around as data is thin, but after the first hour, it becomes a very reliable indicator because it is anchored by millions of shares of trading data. This is why professional traders pay so much attention to it. It is not just a guess, it is a mathematical reflection of the entire market's participation up to that exact second. A common question is, why not just use a moving average? The difference is critical. A moving average only looks at price. Every candle is treated equally, whether 1,000 shares were traded or 1,000,000. VWAP, however, gives more weight to the levels where the most volume occurred. Imagine a stock spikes on almost no volume. A moving average will follow that spike higher, but the VWAP will stay steady because it knows there was no real conviction behind that move. For a day trader, this distinction is the difference between avoiding a trap and getting caught in a fake breakout. By incorporating volume, VWAP provides a layer of truth that price-based indicators simply cannot match. It is the difference between seeing what happened and seeing what actually mattered. One of the biggest reasons VWAP is so effective is because of how institutions use it. Large hedge funds and pension funds don't just click buy on 1,000,000 shares of Apple. They use algorithms to slice their orders into small pieces throughout the day. Their primary goal is to get an average execution price that is equal to or better than the daily VWAP. If a fund buys a stock below the VWAP, their trade is considered efficient. If they buy way above it, they've overpaid. Because these massive players are constantly trying to trade near the VWAP, the line naturally acts as a magnet for price. When you use VWAP, you are essentially looking at the benchmark that the smart money uses to judge their own performance. You are trading on the same playing field as the professionals. As a beginner, you can use VWAP as a simple sentiment filter. If the price is consistently trading above the VWAP and the line itself is sloping upward, the overall sentiment for the day is bullish. In this environment, you should primarily be looking for long entries. Conversely, if the price is stuck below the VWAP and the line is sloping downward, the sentiment is bearish, and you should focus on short selling opportunities. This prevents you from fighting the trend of the day. Many traders lose money because they try to buy a falling stock that is trapped under the VWAP, thinking it's cheap. But in professional trading, if it's under VWAP, it's often under institutional selling pressure. Stay on the right side of the line, and you've already improved your odds significantly. Now let's talk about the most popular way to trade with VWAP, the pullback strategy. Many traders wait for the price to make a strong move away from the VWAP, indicating a new trend is forming. But you don't want to chase that move. Instead, you wait for the price to return to the VWAP line. This is your high probability entry point. If the stock bounces off the VWAP and starts moving back in the direction of the trend, it shows that buyers are stepping in at the average fair price. You can set your entry near the bounce and place your stop loss just on the other side of the VWAP line. This gives you a clear, disciplined setup with a defined risk. It is all about patience, waiting for the market to come to you at a price that makes sense. Let's talk about the reality of the numbers. Based on historical data for intraday trades on liquid US stocks, using VWAP as your primary anchor typically yields a win rate of approximately 55 to 60%. Now, that might not sound like much, but in the world of professional trading, it is a massive edge. The secret isn't just the win rate, it is the risk management. Because VWAP allows you to enter close to your stop loss, you can easily achieve a 2-to-1 or even 3-to-1 reward to risk ratio. This means that even if you only win half of your trades, you are still highly profitable. VWAP provides the structure you need to manage your risk effectively, ensuring that your winning trades are always larger than your losing ones. It is about consistency over perfection. VWAP works best when it is paired with volume analysis. A bounce off the VWAP line is much more significant if it happens with increasing volume. This surge in volume acts as confirmation that institutional traders are indeed defending that price level. If the price touches the VWAP but the volume remains low and flat, the bounce is much less reliable. Always look at the bottom of your chart. You want to see the big bars appearing as the price reacts to the VWAP. This confluence of price action, VWAP levels, and volume surge gives you the highest probability trades possible. It shows that you aren't just seeing a random bounce, but a coordinated effort by major market participants to maintain the current trend. Let's walk through a real-world example using the SPY, which tracks the S&P 500. First, we look at the 1-hour chart to establish our trend. We see the SPY has been making lower highs and lower lows all week, a clear downtrend. Now we move to the 15-minute chart for our entry. After the market opens, the price rallies back toward the VWAP from below. To an amateur, this might look like a recovery, but to a VWAP trader, this is a potential short entry. As the price touches the VWAP, we see a shooting star candle and a spike in sell volume. We enter short with a stop loss just above the VWAP. The price then resumes the 1H downtrend, dropping significantly. This is the power of aligning the big picture with the intraday fair value. It is structured, logical, and highly effective. To summarize your new VWAP strategy, first, focus on liquid US stocks where institutional volume is high. Second, always establish your trend context on a higher time frame like the 1-hour chart. Third, use the 15-minute VWAP to find your entry points on pullbacks and bounces. Fourth, always look for volume confirmation to ensure the move has real conviction. And fifth, be disciplined with your risk. Use VWAP as your anchor for stop losses and profit targets. Trading is not about guessing. It is about following a proven process. By mastering VWAP, you are moving away from impulsive decisions and toward a professional, volume-weighted approach. Start small, keep a journal of your VWAP trades, and remember, the trend and the volume are your best friends. Happy trading. VWAP transforms your trading from guessing to institutional level structure. It helps you find fair price, high probability entries, and disciplined exits. Start practicing with VWAP on liquid stocks, manage your risk, and trade with the trend. Happy trading.